Hey, I'm Liz Wald, and it's Web3 Wednesday. The last few weeks, I've covered some fairly negative trends going on in the crypto Web3 world. Decline in NFT prices, layoffs at companies like Meta, the fact that people are going to fewer conferences, and the like. So I wanted to show something that was going in a positive direction. And I'm hoping it's getting into a positive direction because people are trading really solid coins and doing their due diligence, and it's not just the next hype cycle that's taking advantage of folks. But something we call crypto driven revenue is expected to double in 2023 from the 2022 numbers. And even more importantly, perhaps, it's expected to grow about 38% over the 2021 numbers. We took a big hit. They fell by about a third in 2022. So we're seeing some recovery here. And if you have a platform that generates crypto driven revenue, you're getting about $241 per user. That's good for the platforms. It might be bad for me. I guess maybe I'm paying too high gas fees or something. But in general, this trend means more people are using crypto, or at least the people who have it are putting it to work more often. And just to set this in perspective of the larger markets out there, the global crypto market cap is about $1.25 trillion. It did peak at about $3 trillion back when Bitcoin was $70,000 a token. And about half of this $1.25 trillion is in the US. So there's about $600 billion of crypto market cap floating around in the US, and that's throwing off about $18 billion in revenue. Asia is the next biggest market for crypto trading, not far behind, crypto revenue generation, not far behind the US. To put that against the actual US stock market, we've got 600 billion in market cap for crypto and 40 trillion in the market cap of the US stock market. So we've got a long way to go before we're really making a dent in that business. So how is crypto revenue generated? It's generated in a bunch of different ways. The most obvious way is trading. Just like on any exchange, when you make a trade, there's usually a small commission. And same here in crypto, from trading, revenues can be generated. Another way is through lending. And this is actually peer-to-peer lending. I can lend my crypto to another individual using a decentralized platform, i.e. a platform not run by any particular institution or government, and I can get a yield on that loan. Another way is for mining, the people who actually do the work to bring these cryptocurrencies into being. They earn revenue from doing that. Staking is another term that you may have heard, which is kind of like leaving your money in a bank and earning interest. You stake your tokens at a crypto exchange where they say, hey, if you leave it for X period of time, and you can choose how long that is, we'll give you some interest on that. There have been some stories of places offering wild amounts of interest and then going out of business. So obviously do your own research here. And then there's affiliates. So just like in any other affiliate business, if I recommend to another person that they buy a particular token, I may be able to earn an affiliate fee for making those recommendations. Probably becomes more often business to business, but it's another revenue source. And finally, dividends. Things called DAOs, or decentralized autonomous organizations, they often say, hey, everyone who's participating in this DAO, contributing, adding information, trading, and the like, for all the circulating tokens that are in here, we're going to pay a dividend to all of the participants. So those are a bunch of different ways that revenue is driven. And, overall, for the health of the industry, I'm glad to see the trend after dipping in 2002 is on its way back up for 2023. So that's your quick hit for Web3 Wednesday, and we'll see you next week.